Greetings. Today is Monday, August 10th, 2025. And the month of August got off to a pretty negative start with a pretty nasty pullback. At least that's how it started. But last week, the market, for the most part, regained a lot of those losses. On the screen right now, I've got a weekly candle chart. This black candle here is the first week of August. But this is last week, and as you can see, for the most part, the S&P 500 was able to recover those initial losses. If we look at the NASDAQ, it's even a better story. The first week of August, pretty negative, but NASDAQ had a very powerful week last week. But that's not the same thing that we see in the small cap space. The small cap universe, as I'm measuring it, is IWM. This is the Russell 2000 ETF. And again, you see a very negative week. And last week's response in small cap was pretty tepid at best. This remains one of the problems in this quote unquote bull market. The small cap or the small companies just can't get going. And every time we reach this resistance level up here, the market pushes those smaller companies back down. If this is a robust, thriving bull market, we've got to see the small caps break through this resistance and finally leave it in the past. So one more point about small caps, and we're going to take a quick look at seasonality charts. If you are a client of ours, or if you've been following our channel, or certainly if you have read my book, you know that I believe strongly in an evidence-based approach to investing. A lot of the industry talks about asset allocation and being diversified, etc. And a common placeholder in a typical asset allocation model is small caps. But on the screen right now, I've got 4 ETFs or 4 indices. I've got the NASDAQ or CompX in my database. I've got the S&P 500, and then I have the equal weight version of the S&P 500, and then I've got small caps. Small caps year to date are actually negative. And so the argument is, do you really want to be quote unquote diversified? Do you really want small caps in your portfolio just because you want to be diversified or just because that's what everybody else does? Or do you want to follow the evidence and says, well, small caps are just not performing. We might have to be concentrated in some of these sectors that are actually performing well while maintaining vigilance and a defensive plan or having that defensive plan in place for if the market turns. One of the things that has concerned us for quite some time is this divergence. You've got some of those large cap, big stocks, the Magnificent Seven, etc., that are performing well, whereas the majority down here, the equal weight S&P 500 or the Russell 2000, those small companies, the majority of stocks continue to struggle. So you can be diversified if you want and have some of these laggards, or you can be concentrated in that which is working. Something to think about. And again, you can read more about that approach or that philosophy in my book, Evidence-Based Investing. Let's flip and now take a look at the seasonality chart. On the screen right now is that seasonality chart for the S&P 500. This is the current month of August through last Friday. You can see that August historically, at least since 1950, is a pretty tame month. But the comment that we're really focusing on here is pay attention. Don't fall asleep at the wheel. We have to remember that September is coming, and historically September is pretty bad. If we look at seasonality now for the NASDAQ, again, so far August is much better than typical, but we cannot forget September is coming. So we want to have that defensive strategy in place. If you haven't already, pick up a copy of my book, Evidence-Based Investing. You can find it on Amazon. If you've already read it, I would love it if you would send me some thoughts, send me your comments, or leave me a review on Amazon. My name is Theodore Hicks. We manage money for individuals and families, and we'd be happy to see if we can't be of assistance to you.